Hello, everybody, and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day, and we are counting down to the next VRIC, January 21st and 22nd at the Vancouver Convention Center. Stay tuned for tickets. But today we've got a great guest for you guys. He is the head of research at Fundamental Research Corp, Sid Rajeev. It's great to have you on.
Thanks for having me, Jesse. Nice to meet you.
Nice to meet you too. So I want to start with this. Your service at Fundamental Research Corp assists investors in uncovering undervalued opportunities. So could you maybe provide us with some insight specifically when it comes to the mining space, how you evaluate those stocks and what in particular gives you a sign that they might be undervalued?
Yeah, sure. So a quick background on us. So Fundamental Research, we are based in Vancouver, Canada. Been around for 20 years. We have covered over 650 companies across a wide range of sectors. We are one of the largest, research shops in North America focused on mining, but we cover other sectors as well: real estate, tech, cannabis, cryptos, you name it. But I would say 70% of our coverage companies are less than 100 million market cap. So a lot of our followers get introduced or get exposed to new ideas by following us on researchfrc.com. That's our platform. But yeah, for your question, we look at a number of metrics, methodologies to evaluate mining companies. The process is quite long, but I can condense it into 5 key steps for you. Number one is we look at the target metal, target commodity of the company we are looking at. Now, I always tell this to our followers: you should be looking at companies that you like, that you think will, or look at metals or commodities that you think will do well in the future, and not necessarily what your neighbor or a friend says. So analyze the commodity or metal first before you look into investments in resource companies. So that's number one. Number two is I look at the market cap of the company. If it's less than $50 million, I know that I'm looking at a company that's potentially high risk, highly speculative, and then a lot of things need to happen for upside potential to happen if in case it happens. Number three is management team and their skin in the game. So you want to see teams with strong track record, teams with strong expertise, not just technical, but also capital markets expertise. And also you want to see skin in the game. You want to see management putting money, their own money, to buy shares of the company before asking investors to buy their shares. Number four is the project that they are targeting. Now that has a lot of elements, including location, how advanced the project is. Do they have a resource estimate? Is it an economic assessment? What is management's vision to advance the projects to production or maybe sell it to a larger company? And number five is the stock exciting? Now, this junior resource space attracts highly speculative investors, and they need to have exciting stories. So you need every company should have a strong pipeline of upcoming catalysts to get investors excited, and also a stock has to move. Like, the stock can only move if the company keeps coming out with press releases that advance their project. So 5 key steps is this is the process we use to analyze any junior resource company.
Those are some great points. And now I want to move to the opposite of that. Are there any red flags that come up when you're evaluating a company that might make you pass on something that initially looked like it could be an opportunity?
Yeah, so we come across a lot of red flags in a typical daily due diligence process when it comes to resource companies. The most common red flag is management team. When we come across management teams that are new in the space, that do not have any kind of success in resource exploration or development, management teams that keep changing their projects or changing their vision, changing their sectors to attract the flavor of the day sectors, that we think is a huge red flag. So we always again tell followers is to just follow companies that are run by strong management teams. management teams that have done this in the past. That's number one. Number two is, companies, one of the common mistakes investors make in the space is mistaking a good company for a good investment. A company might look good on paper, they might have a solid project, management team is strong, but if it's overvalued, then it doesn't make it a good investment. So you also have to look at the valuation perspective. You also have to see if there are enough catalysts in pipeline to make the stock move up. So that's number two. Number three is I would say there are a lot of factors, but what I want to talk about is maybe companies with no independent board members. That could be another red flag. And number four would be, there's a tendency for companies to over exaggerate their results. So as investors, what we should look at is remove or try to extract all the valuable materials from a press release and by removing all the noise before you make an investment decision.
Well, I wanted to get to some recent news, and this is stepping far outside the junior mining space into the larger cap sector, but that's the attempted takeover of Canadian company Teck Resources. For those unfamiliar, a resource company involved in copper, zinc, and coal for steel making, and Glencore was the one trying to take them over, and Teck has rejected the deal. So I wanted to get your take. Why do you think they rejected the deal, and do you think it was the right call?
Yeah, the quick answer is yes, they made the right call. Teck came out and said they felt that the offer is opportunistic, and also the offer exposes their investors to highly risky areas like the DRC. Glencore is exposed to the DRC, which is the Congo, and also it exposes their investors to fossil fuels because Glencore has exposure to coal and oil. So that was their reasoning. But we feel there's a strong reasoning, and we feel the valuation was not right enough. The bid was for $23 billion US dollars. Just to put things in perspective, Glencore is a $70 billion market cap company. So this 24 billion would increase their asset base by another 25%. So this 24 billion was the offer. And then when you look at the valuation metrics like EV to revenue and EV to EBITDA, that offer price is exactly in line with the sector averages. Which means that the offer is giving no premium to Teck, and typical M&A is done at 20 to 30% premium, some even 40, 50%. So if the bid had a premium, at least 10, 15%, I think Teck would have entertained the offer.
Interesting. So I want to move a little bit further into M&A activity in the mining space. Do you expect we see more M&A maybe in the junior mining areas as well, larger companies acquiring some of the juniors as the metals and commodities start to go through more of a bull cycle? And how should investors be thinking about M&A when they're selecting companies to potentially invest in?
Yeah, so we are very bullish on the junior resource sector, not necessarily on metal prices, but we think junior resource stocks, number one, they have not moved in line with commodity prices. So we feel a lot of junior resource companies are undervalued. Number two, we know for a fact that larger players are actively seeking fundamentally solid projects. Just last week, we saw another big bid, which is Albemarle, one of the largest lithium players, made a bid for Liontown Resources, an Australian lithium company. The bid was for $4 billion, and Liontown rejected the offer. And that's primarily because one of their flagship assets, their NPV of the project is over $4 billion. So we felt that Liontown made a good decision to reject the offer. Just a few days ago, Hecla signed an agreement to acquire ATAC Resource, a small junior, for $40 million. That's an approved deal. So we have been seeing a lot of M&A activities in the past few months, and we think it's going to continue through the year, primarily because equities look undervalued with respect to metal prices in this market.
What's up, guys? Quick break. My name is Jay Martin. I'm the CEO of Cambridge House and the host of the Vancouver Resource Investment Conference. I wanted to quickly point your attention to a link right beneath this video where you can subscribe to our new weekly newsletter. If you want to better understand the minds of the best investors in the resource space, subscribe to this newsletter. I author it personally every Sunday, and I love writing it. Hit that link below to subscribe. All right, back to the interview.
So I want to shift now to the Canadian government. They have introduced a 30% tax credit for investments in equipment used for the mining and processing of critical minerals. How do you look at these sorts of factors when you're evaluating the sector? And do you see more government support coming for the mining sector? And is there any kind of downsides to this kind of government intervention in your view?
Yeah, so it's always positive to get support from the government. Now, we are expecting continued government support in terms of North American and European governments to support mining projects. Now, I don't want to make a broad comment that governments are going to support mining in general, but I think governments are going to support critical minerals, EV metals, because right now, most of the consumers are heavily focused or reliant on China and Russia for these resources, for these metals. So there is a strong incentive for Europe and North America to have domestic production, so boost domestic production so that their consumption or demand can be met. So we expect continued support from all these governments to their projects. In addition to the 30% tax incentive you mentioned, the Canadian government a few months ago, they announced a $4 billion package to help companies focused on critical minerals in Canada. And the US government has also shown that they are willing to support projects in the US.
So I want to get your thoughts on if you think we're on the precipice of a major bull run. Some are calling it a super cycle in the commodity space. And if so, based on all the research you've done, which commodities or metals do you think stand to benefit the most? Is it battery metals? What do you think on? I would like to get your thoughts on uranium as well, the precious metals. What are the things that you're most paying attention to in the space at the moment?
Yeah, so as I mentioned earlier, metal prices we think could be under pressure this year, primarily base metals, and that's because of the higher interest rate environment, slower GDP growth, and rising supply. EV metals also, they ran up a lot significantly last year, and they have been pulling back, and we expect continued pressure on EV metal prices as well. And that's because both base metals and EV metals, these markets are expected to be in surplus. Most of the markets, surplus is expected to increase or deficit is expected to decrease. Now, both these scenarios mean downward pressure on prices. So across the board, we think base metals and EV metals will be under pressure. But that said, we expect equities focused on these sectors should do well. But in terms of what we are bullish on, it's gold and silver, and that's because as the U.S. Fed gets more dovish, they start slowing or pausing rate hikes. We think we should see another spike in gold and silver prices. Now, how do we forecast gold prices? We have a number of in-house models, but the number one method we use is something connecting gold to US M2 money supply and inflation. And once we plug in M2 money supply and inflation into our models, we think gold could hit somewhere, $2,100 an ounce this year, sometime this year.
And are there any thoughts you could share with us about the uranium space? Do you do research there as well? Are you bullish on uranium overall?
Yes, so uranium is a metal or as an energy source we have a long-term bullish outlook on. And number one, it remains one of the cheapest and cleanest sources of energy out there, and the supply chain is highly vulnerable. So when you have rising demand, because the benefits of having uranium as a good energy source and vulnerable supply chain, that's always good for a commodity market where prices, you could see price spike in prices anytime you see some kind of problem in the demand side or the supply side. And again, this is a sector where domestic production is highly looked after, or the governments worldwide are looking to increase their production, nuclear production, and also they need more uranium because of that.
So before I let you go, and with the big, huge caveat that nothing here is investing advice, people need to do their own due diligence. It's amazing how little people realize how much due diligence is required in the mining sector. And if you're not willing to put the hours in, then there's no point in speculating there. And of course, without doing any disservice to your own clients at Fundamental Research Corp, are there any specific companies that you could share with us in the mining space that you're either watching or investing in right now that you think present an opportunity?
Yeah, sure. So we currently actively cover more than 100 different companies across different sectors. And so we just not produce one report, we keep producing reports on them. Anytime companies have a press release, we do a report saying, hey, what we think of that press release, how does it impact our valuation, has our outlook changed? So, I always encourage, our followers to actively keep checking our website for new reports, new updates on companies, and also sectors we cover. But yeah, no, so we within our coverage list, we have a list of top picks where currently the top picks has about 20 different companies from different sectors. I'll mention two of them. Number one is a company called Western Exploration, TSX Venture, WEX. They have a gold silver project in Nevada, 1.3 million ounces of gold. And this project has two parts. One is a shallow, near surface, open pitable, low capex, less than $15 million, low OPEX, maybe $800 an ounce project that can be quickly advanced to production. And then they have a deeper gold silver resource. Now, the strongest point of this company is excellent management team, the strong track record, and Agnico owns more than 15% of the stock. So we think this is a good acquisition target. The second pick I can mention today is Millennial Potash. It's a brand new potash company with the advanced stage project in Gabon, Western Africa. Now, number one reason why we like the company is its management team. Three of their previous deals were sold for more than $1 billion combined selling price. And those deals included Millennial Lithium, Potash One, and Alana Potash. So strong management team with good M&A track record. Now their project in Western Africa is well located. Number one, it can not only produce potash for Africa, it also can send potash to Brazil. Now, Brazil imports 95% of its potash consumption, and Gabon is closer to the other exporting nations like Canada, Russia, Belarus, and Africa imports most of its potash consumption. So advanced stage projects, strong management team, excellent location is why we like this story. So Western Potash, so Millennial Potash and Western Exploration are the two picks I want to introduce to your followers today.
Great. And potash, a very under-discussed and underappreciated commodity. So would love to have you on at some point in the future to dive into that. Really appreciate you joining us for today. Yeah, for those who want to learn more, maybe you could fill us in a bit more on Fundamental Research Corp, where people can find that online, and anywhere else you'd like to direct people.
Yeah, so the platform is researchfrc.com. You can sign in and then you can access all of our reports and notes on companies and sectors. We also have a YouTube channel, so just search for Fundamental Research Corp. We do weekly videos on our thoughts on, again, companies, sectors we cover, new trends. We discuss our top picks. So, and also we have, our profiles on Instagram and Facebook and LinkedIn, name it. We have our social media presence.
Great. Well, I'll put links to all those in the description below so viewers can check that out. Thank you so much for joining us, Sid, and hope to have you on again to continue the conversation.
Thank you, Jesse. Have a good day.